Yeah, I feel like one interesting economic milestone we hit was just a few months ago when every government in the world acknowledged large amounts of consumer inflation, CPI and producer inflation, and it was acknowledged as an issue. I feel like a year ago it wasn't acknowledged, but today it is acknowledged. And probably the big economic driver that will continue will just be inflationary public policy. And if we acknowledge that we've got 5 or 6 or 7% inflation, there's no central bank in Western Europe or the United States that has articulated a plan to raise interest rates to 5 or 6 or 7%. So we're sitting in a zone for the next 3 to 4 years where it looks like we've got negative real yields, we've got continuing inflationary policy, and the discussion has moved into mainstream, the discussion of stagflation. And I guess what we saw, which was interesting in the past month, was we saw a crisis of confidence in the equity market, right? That brought, it used to be Bitcoin was a very volatile asset that may or may not be an inflation hedge. And now equity looks like a very volatile asset that may or may not be an inflation hedge. And so you've got the mainstream apparatus, mainstream media, mainstream investors acknowledging crypto and Bitcoin as an asset class versus property versus bonds versus equity, no safe haven, and a mutually agreed problem. And I guess one last point I make is I hear rumors from all my contacts that there's an avalanche of macro hedge funds coming into the space, setting up accounts, like an increase by almost an order of magnitude. It used to be there was 1 or 2 macro traders. And now I think a lot of hedge funds are setting up accounts, and their view is we have to trade this stuff. Whether or not they'll stand up and say, I want to hold $1 billion or $10 billion of it for a decade, well, we're still waiting for that. But it seems like at the end of the year, at the end of 2021, I heard all sorts of stories that, conventional macro funds yielded 3 or 4% ROI in the year, and crypto hedge funds had 500% returns in the year, and 200% returns, and some had 1,000% returns and 100% returns. So if there's anything that people understand on Wall Street, it's money. And someone made 10 or 100x as much trading that volatility. Whether or not I'm ready to marry this asset, I'm sure that I want to trade and I want to be engaged. I can't afford to ignore this. And that's kind of the message that we're hearing even from the big bulge bracket banks on Wall Street, that, I'll paraphrase them, this is not going away. We need to figure it out. I think a lot of people in the United States, they haven't lived under hyperinflation, and also they erroneously think that their real estate holdings or their equity holdings are not currency derivatives. They think that their exposure to inflation might be holding currency or holding low yielding bonds, but they don't really think about their other assets as having a currency risk. Whereas if you live in Argentina or Venezuela or Zimbabwe or if you live through a currency collapse, you realize that the currency is exposed, the sovereign debt is exposed, right? Those countries default on their sovereign debt all the time. Argentina, in essence, renegotiated $50 billion of sovereign debt a week ago. So they're always defaulting on debt, but it turns out that if you have all your assets in a local business or local stocks, those get crushed too when the currency collapses, because their revenues and cash flows are in the local currency. So if you've got a 50% inflation rate, the cost of not embracing Bitcoin is 50% of your assets would be lost to you, or 50% of your currency derivatives in 12 months. So the cost of doing nothing,